Ladies and gentlemen, welcome back to the channel. Stocks are selling off a bit today. S&P is down about 0.5%. Other risk-on indexes like the Russell down closer to 1%. You're probably confused to why this is happening, so I'm going to break it down and give you my best understanding of this. And I think it really comes down to the Fed Bostic, and what he said today. Kind of spooked markets a bit. So we'll get into that here in this video. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already, because it's free 99. It costs you absolutely nothing to do so. But on top of that, check out that link down below in the description of this video for the trading community. If you guys want to come invest and discover undiscovered AI stocks. I put $75,000 into one specific AI company that I think is going to explode in the month of August. Might be wrong. I'm not a financial advisor. Don't be a jackass. Don't invest your money based on what somebody else is doing. But I think there's a lot of opportunity in this market. So come check out that group if you would like to. Again, link down below in the description of this video. With that said, let's get into today's episode. Now, here in broader market news today, we're going to start with some of the first headlines that came out this morning at about 8 o'clock in the morning and work our way up through the end of the day. Now, Fed Bostic spoke about an hour or two after the markets were, open. And that's what seemed to have caused a lot of the pressure on especially small cap areas, high beta stocks, high growth stocks. We'll discuss that once we get to it. But first and foremost, Putin on meeting with Trump says the interest was mutual. Putin says that he has nothing against meeting Zelensky. So it looks like, progress is progressing potentially in getting the war in Ukraine to end. This is not something that the markets care about, this entire conflict, but markets do care about what secondary tariffs or sanctions could be put on countries that buy Russian oil, right? Like China, for an example. Trump last night was talking about potentially adding an additional tariff on China for purchasing Russian oil. I don't think that's going to happen as long as we get some kind of progress on negotiations. There's a light at the end of the tunnel, if you will. But getting this conflict ended, getting that, that threat of tariffs on China removed is going to be a positive for markets and for inflation expectations, considering a lot of people think tariffs cause inflation, which they don't, let's be clear. But from Wall Street's perspective, not having additional tariffs is positive on inflation. Putin says both Russia and the U.S. are interested in a bilateral meeting. Also in the news today, Donald Trump opens up 401ks to crypto and private equity investments. Donald Trump also today posted on Truth Social, the CEO of Intel is highly conflicted and must resign immediately. There is no other solution to this problem. Thank you for your attention to this problem. The fact that you even have a president talking about a specific company is kind of wild. Again, if you don't think Trump likes the stock market or loves the stock market going up, you're wrong, okay? Trump wants stocks to do well. He wants people to make money. You just, as an overarching thesis for the next 4 years, I don't think you want to bet against that. Call me crazy, but that's not something I want to bet against or assume too much negative things about, right? Do I think Trump will threaten things? Of course. Do I think Trump actually wants to flirt with economic disaster, like more tariffs on China? No. U.S. initial jobless claims came in at 226,000 today. The forecast was 222,000, so it was a little bit higher than expected. The previous week was 218,000. Not a really high number, but starting to go up a little bit. Could be making some people nervous today. Continuing jobless claims came in at 1.974 million. Last week, the estimate was 1.95 million. So it came in higher than the estimate. So again, not exactly great. Not the worst numbers we could have possibly gotten, but not comforting either. U.S. Commerce Secretary Lutnick on China says, I expect the deadline to be extended to allow for trade negotiations. He says he expects the deadline to be extended on China for another 90 days. Lutnick says Trump has spoken to all key tech leaders in the recent days. Trump told tech companies he won't charge tariffs if they build semiconductors in the country. Lutnick says he expects $50 billion a month in tariff revenues. The Swiss government says the Federal Council to continue negotiations with the United States. The Swiss government is not considering countermeasures to U.S. tariffs at the present moment. And Switzerland's aim is at reducing tariffs as swiftly as possible. And the Swiss government says the newly imposed U.S. tariffs place a substantial strain on Switzerland's export-oriented economy. Swiss President Keller Sutter on U.S. tariffs says the goal of the Washington visit was to present a new offer to U.S. officials, which was achieved and was a positive development. And she says it was clear that the U.S. president is sticking to tariffs in the short term. U.S. June wholesale sales came in at positive 0.3%. Consensus was positive 0.1%. Fed Bostic today says a ton of economic scenarios that could play out, hard to assign probabilities. Bostic says the outlook is for the economy to continue slowing, but also expect real uncertainty about what that means for jobs and inflation. Bostic says likely to be upward pressure on prices for the next 6 to 12 months. That puts pressure on the Fed. He says that firms are still in a, quote, wait and see pattern around employment. Bostic says the most important question for the Fed is whether tariffs will shift prices once or more persistently. Now, the Trump team likes Fed Waller's desire for rate cuts based on forecast and favors him for the Fed chair. Fed Bostic says policymakers would not respond to a one-time price shift, but there are compelling reasons to be skeptical. And Fed Waller has met with the Trump team, but not with the president. Bostic says, I am skeptical that the tariff impact will be temporary. And the Trump team likes Waller's desire for rate cuts based on forecasts. Fed Bostic says the way tariffs are unfolding could make it hard to pin down the impact and suggests the episode will last much longer than people anticipated. Bostic says evolution of tariff rollout could extend the impact. Bostic says businesses are using a mix of approaches in changing prices, and there is ongoing discussion this could shift expectations. Somebody literally commented on this and says he needs to stop talking. He's killing the market. Fed Bostic says, I feel businesses will continue adjusting to tariffs well into next year. He says the fundamentals of the economy are still quite solid. He says that small businesses are feeling acute strains from tariffs due to narrower supply chains. He says that small businesses also have less ability to absorb import taxes without raising prices. The Swiss president says we had signals from U.S. negotiators that they support the deal and think it's good, but you can't be 100% certain that Trump sees it that way. And I love how open the Swiss president is here. Swiss President Keller Sutter says the balance of power is clear, but we also have some strong cards to play. She basically says, like, yeah, we're screwed, but we're screwed. that's what I got out of that. But hopefully, obviously, we get a deal done with Switzerland. And Bostic says, we're yet to see all the price changes. We'll see. And Bostic says the stress on lower income consumers has been building. Excess savings from the pandemic have been spent. Yeah, that was spent a long time ago. Fed Bostic says, I don't know how consumers would respond to another round of price increases. I do. They would not buy those things. They would buy less of those things. Now, these next comments are some of the comments that really, I think, shook the markets today a little bit more. Bostic says the jobs revisions were quite large, showing churn and turbulence in the economy. Bostic says, I have not seen signs of a dramatic slowdown in the labor market in the southeastern states. Bostic says the July jobs report did cause a shift in thinking about how the Fed is doing on its employment mandate. So the Fed's, even some of the most, hawkish Fed members that were not team rate cuts are starting to get a little bit more concerned about the labor market. Fed Bostic says the jobs revision number raises a question of whether the U.S. is still at full employment and whether we are more balanced now. Bostic says it's been surprising how the markets have shrugged off the price impact of tariffs. I mean, we haven't seen inflation from tariffs besides in certain areas of goods, which, don't really matter much to the economy. If we put it simply, like, you're not going to the store and just watching everything go up because of tariffs. That will not happen because of capitalism and because of competition. Bostic says, I am expecting volatility to remain heightened. Bostic says that tariffs can't be looked through because they are meant to induce structural change, potentially leading to more persistent impacts. Fed Bostic says, I still feel that one cut for this year remains appropriate, but there's a lot of data coming before the September meeting. Fed Bostic says the jobs data did indicate risks to the labor market are much higher than seen before the last meeting. Bostic says, I am hopeful that by mid to late next year, price pressures will have eased. Netanyahu says Israel intends to take control of all of Gaza. Bostic says it would not be surprising if dissents continue at the FOMC meetings given the complexity of the moment. He says it's harder now to make policy decisions than it was 12 months ago. Risks to both mandates are changing. Bostic says businesses are moving AI into their business processes, but the implications for employment are not clear. Bostic says the rise of pay later programs shows that consumers are stretched. This is a source of concern for the Fed. And Bostic says the U.S. consumer is a big question mark right now. And you see how this has really evolved where, before the Fed said the consumer's strong and they're just fine, labor markets are strong and blah, blah, blah. Like the same things we've heard for years. And now even Fed officials like Fed Bostic are like, we don't know if the consumer's doing well or not. Like it looks like they're slowing, and that is a shift. Okay, that's even a shift from the last time that we heard Fed Bostic speak. Okay, and that I think makes Wall Street a little nervous. In fact, stocks tend to do the best when the Fed is on pause, right? When the Fed is not doing anything. Stocks do not tend to do well when the Fed is hiking. At least not in the last cycle. Back in from '05 to '08, when the Fed was raising rates, the markets actually did well, because if the Fed is raising rates, intuitively, that means the economy is doing good, right? Or at least it should, right? If the Fed is raising rates or trying to cool down the economy. When the Fed is paused, it means the economy is doing okay. Inflation's not too bad, right? That's historically the best time for stocks, right? When the Fed starts to cut rates, if they're cutting rates because inflation was high and came down, that's fine. But if the Fed is cutting rates because the economy is weakening, that's not as great. And that's what Wall Street's trying to figure out right now is, did the Fed wait too long? Are we going to continue to see economic cooling, right? If we can use some of the Fed's terminology here. And from Wall Street's perspective, it's too soon to know that. So there's a little bit of nervousness and or uncertainty out there. I don't think we are going to go into a period of, recession or, massive slowing. But hey, could be wrong. Anything's possible. And according to the New York Fed, one-year consumer inflation expectations came in at 3.1% in July versus the expected 3%. 3-year ahead expected inflation remained unchanged at 3% in July. Did get a new AI investors sentiment survey that came out today. Not surprising what the results are. 34.9% of investors are bullish, 21.9% are neutral, and 43.2% are bearish. So you had a 10.2% rise in bears from 33% to 43.2%. About a 5% drop in neutral investors, and about a 6% drop in bullish investors. Okay, so bullish fell, neutral fell, and bearish rose. That's actually a good sign, right? You want to see people bearish for stocks to continue to move higher. You got to climb that theoretical wall of worry. There's got to be things to conquer and problems to solve, or, markets kind of just end up fizzling out. Now, CNN's Fear and Greed Index today is coming in neutral at 55. Even yesterday, you were, I believe, in greed, but 1 week ago, you were at 59 in greed, and 1 month ago, you were in extreme greed. So you've definitely seen sentiment dial back a bit. Market momentum is neutral. Stock price strength is greed. Stock price breadth is greed. Put in call options, fear. Market volatility is neutral. Safe haven demand is neutral. And junk bond demand currently in. And you can see here on the day today, the VIX is up 2.44%. Russell 2000 is really one of the underperforming indexes, down 0.64%. NASDAQ slightly in the green, up 0.15%. S&P is down 0.26%, and the Dow is down 0.76%. Keep in mind, August is seasonally a weak period for markets. August, September, weak periods. October, things get a little bit better in the second half of the month, and then November and December are seasonally strong. And I think there's a lot of reasons to be bullish on the last, call it 2.5 months of this year. And I think, we're in for quite a rally in that period. But between now and then, could you get some chop? Yeah, I'm not expecting any kind of large drawdown here. But could you get some chop back and forth, some volatility? Of course. 10-year Treasury yields are up about 1.5 basis points today, and oil is down about 0.2%. Besides the comments from Bostic, it's not actually a whole lot going on today. We do have some earnings in after hours as well that I should mention, because they could be important. The Trade Desk, Rocket Lab, SoundHound, NewScale, Block, Pinterest, Atlassian, Take-Two Interactive, and Twilio will report today in after hours. Friday, you'll get Fubo, Tempest AI, TerraWolf, and Wendy's tomorrow morning that will also report earnings. So let me know your thoughts on all of this down below in the comment section. Honestly, I'm taking this as an opportunity to buy if we do get any, larger drawdown here. But keep in mind, there's still a lot of earnings to go in the coming weeks, especially in some of the smaller companies that you and I likely invest in. Like in the trading community, we've only had a couple of our stocks actually report earnings so far. And I'm expecting to get some big moves throughout the rest of August. Check it out, link down below in the description of this video. If you would like to come join that, hit that like button and subscribe to the channel on your way out of this video. Have a great rest of your day, and I will see you in the next one.